President Obama has nominated to leave the Federal Reserve. Well, she was facing questioning from senators on Capitol Hill on Thursday. She needs the Senate's approval if she is to take over from Ben Bernanke when he steps down in January. Well, markets clearly liked what they saw at the hearing, despite some tough questions. They believe that she'll be confirmed in the job. Ms. Yellen has been a strong supporter and architect of the Fed's massive stimulus measures, and she was very clear that it's too soon to start removing them.
Well, still in Washington, Mr. Obama's nominee for the next head of the Federal Reserve faced some tough questioning at her confirmation hearing. Janet Yellen told senators that while progress has been made, there's still work to do on the U.S. economy. And she defended the central bank as a few senators raised concerns about the Fed's stimulus program.
Yellen's main message was one of continuity, which shouldn't be much of a surprise given that she's been the vice chair of the Fed for the last 3 years. She's one of the main architects of the policy of quantitative easing, the flooding of financial institutions with billions of dollars in the hope that they will then lend to Main Street and help create jobs. But there's plenty of evidence that banks are holding much of this money and not lending, which led to this exchange, one of the more pointed of the hearing, as to why she's continuing with this policy. Because it's working, or simply because Wall Street wants it to continue.
Would you agree that while it has been an attempt to stimulate the economy, the more well-off have benefited much better than those at the lower end of the spectrum?
These policies have probably, to some extent, boosted the stock market, which may be an example of what you're talking about, but it's also played an important role, I think, in helping the housing sector and boosting housing prices.
Some senators expressed concern that prolonged monetary easing would create an asset bubble. Yellen said she does not see any price misalignments that would threaten financial stability. But she added that Fed policies will pay close attention to possible side effects of their policy.
Most economists are tipping the Fed will start scaling back its $85 billion a month bond buying program at its March meeting. Since 2008, it has held interest rates near zero and provided stimulus through 3 massive rounds of bond purchases. The cheap funds made available by the Fed and other central banks have underpinned the rally in global equities, enabling investors to borrow large sums at low interest rates and invest them in growth areas such as emerging markets. Ms. Yellen stuck to the Fed line, repeating any tapering would be dependent on economic data, with the major emphasis on unemployment currently at 7.3%.